Welcome back. You're tuned into Market Fatafat, where we are taking you through all the stocks that are buzzing away in trade today. And let's get started yet again with all the stocks that are in focus today. And coming to you, Inox Wind is the name that you have picked out for us, an earnings candidate. Tell us, what does the report card look like?
Yes, that's right. And actually, the stock is up over 16% today. They have reported revenue of 651 crore, which is up by 84%. Also, the net profit has turned from a loss of 65 crore to a net profit of 47 crore. Now, if you talk about EBITDA, that has grown by over 95% from 76 crore directly to 148 crore. Also, we are seeing some improvement in margin as well from 21.5% to 22.7%. Also, if you see on charts, then the stock seems to have given a good breakout from its upward sloping trend line, which keeps the bias positive here.
Okay, surely keeping an eye out on that, but let's also listen in to the latest episode of Wealth Creators, where we actually managed to speak to Devansh Jain of Inox Green Limited and the group over there. So let's listen in to what he had to say.
We have publicly stated our vision is to get to 2 gigs. Without specifying timelines, I think it's in the near future that we're going to get there. Obviously, depending on how large the Indian market becomes, if it's going to be closer to 10 gigawatts, which we think it should be by 2027, I think we'll take a larger chunk. We have the what I would call, we have the right to win. Our break-even costs today are negative. Along with our O&M business, even if I sell 0 megawatts, I make money. I'm not saying we won't sell megawatts. We're gunning for such massive numbers now that effectively I'm probably the last man standing in the industry. And I think that's been true even when the industry went through hell. We're probably the only player which survived with 0 haircut to any banker or creditor. I think on the Inox Green side, it's a natural play of Inox Wind as well. We have stated in the next 3 to 4 years, we want to make it a 10 gigawatt play. Frankly, I think we should be doing it much earlier than that. We're evaluating a lot more opportunities, not just O&M now, because the canvas within O&M is limited in terms of what we can acquire in the market. Organically, we're growing so rapidly, and we're looking at virtually all the inorganic pieces available in the market.
Absolutely, and you can catch the entire episode of the Wealth Creators on 14th of August, Wednesday at 7:30 p.m. But let's move on and talk about the recent listing, Ola, that surely is making its mark, because today also, second consecutive day, we are seeing that the stock is locked in upper circuit, currently trading at 109. So yes, from the listing day, that's just Friday itself, we've seen the stock go up as much as 40%, and this is the second consecutive day of its debut on the D Street, and still making that big move over there. On Friday also, we've seen it go up almost 20%. Today also holding on to gains of 20%, locked in upper circuit. Good volumes is what we're watching out for. But listen to what Bhavesh Agarwal, CMD at Ola Electric Mobility, also had to say in terms of the mission to create EV energy in India as a future. What is the outlook there? Listen in.
We are on a mission to really create the EV future, the energy future of India, and we really want to make that future happen as fast as we can. It's a multi-decadal journey, and we want to have the support and partnership of the public markets in India. So we are very excited that people have reposed their faith in us, and prices will go up and down. I'm new to this, but we'll learn. Prices will go up and down, but fundamentally our effort will be on value creation for the country.
All right, moving on, then Amara Raja is also focusing on the light vehicles currently, but also mentions that with the recent MOUs and technical advancements, he will also focus on the four-wheeler segment going ahead. Let's go across and listen in and understand the opportunities from this plant and the growth potential. Let's go across and listen in.
Today, the kind of MOUs we have, the kind of customer base we have, at least half of this capacity is already spoken for, and the other half we're sending out examples. We're doing trial productions right now for other customers, but largely it's for the 2- and 3-wheeler applications. And we're pretty confident by, in the next 24 months, we'll be able to completely not only fill this capacity, but start on our phase 2 as well. After our recent announcements on technology partnership, even on the high voltage pack, 4-wheelers, commercial vehicles, trucks, a lot more opportunities have been flooding us. So we will definitely be taking a second look at this, but ultimately that will provide a much larger opportunity for us in the longer run. So it's not a part of the market that we're ready to ignore.
Okay, now let's also bring on board Sameet Chavan, Chief Analyst, Technicals and Derivatives at Angel Broking, joining in with us also. Sameet, good afternoon. And the first stock that you've picked out for us today is Amara Raja. You were just listening into the management as well. But what is your outlook on the stock? What is it that one should be expecting in terms of a move here?
See, as far as this stock is concerned, this stock has been moving in a northward direction since last many months now. We can see a series of higher highs, higher lows in all time frame charts. Recently, stock underwent some sort of consolidation phase, but the kind of price and volume activity that we have been witnessing since morning, it suggests that the stock is likely to come out of its recent slumber phase. So as far as levels are concerned, 1700, 1720, these are the next important levels to watch out for. Once this stock breaks out beyond those important levels, we could see next leg of the rally getting unfolded, and then probably stock can head towards 1900 or even 2000. So overall the bias remains positive, and on the low side now 1400, 1450 has become a very strong support.
All right, moving on then. Ansh, you've picked out Jubilant FoodWorks for us, another earnings candidate. It's trading with gains of more than 9% in trade. Tell us, what does the result look like?
Yes, that's right. It's trading above 9%. Anytime we may see a upper circuit hitting as well. So company has reported revenue of 1,933 crore, which is up by over 44%. Even EBITDA has shown a good up move of 38% from 276 crore to 383 crore. If we talk about margin, we are seeing some improvement here as well. Actually, it has come down from 20.7% to 19.8%. But if we talk about net profit, that has actually doubled from 29 crore directly to 58 crore. Also, if you see on chart, then the stock has actually touched a 2-year high level. Also, it has registered its biggest single session gain in over 2 years. Also, it has been advancing from last 5 consecutive months, indicating very strong positive stance here.
Absolutely, and also brokerages, we're seeing even Citi on Jubilant Food, they have also hiked the target price to 715 rupees per share, and they believe that for Jubilant, the outperformance journey has just begun. So Sameet, do you think that now it's a good time to enter into Jubilant?
See, as far as Jubilant Food is concerned, the low hanging fruit is already gone. Stock has been rallying since the early part of May. It has rallied from the levels of 440, so nearly 50% gain in last 3 months. So obviously risk reward will not be favorable for the bulls. But yes, in case of any decent dip towards say 620, 600, if at all this stock managed to give decent retracement, that would be an opportunity to go long, but not at current level. As of now, it should be the strategy should be to stay put and ride this momentum. Next levels to watch out for would be around 685, 690 in the near term.
All right, moving on to another buzzer in trade. Aarti Industries is in focus today on the back of its Q1 results. Let's quickly take a look at what the results are saying. Currently, the stock is reeling under pressure, trading with cuts of 6.7%, but it has seen a PAT uptick of 3.8% on a quarter-on-quarter basis. The revenue has also seen an uptick of 4.6% on a sequential basis. The margins have seen expansion of 48 basis points, and the EBITDA has also seen an uptick of 7.8% on a quarter-on-quarter basis. Now, if we look at the outlook, the management's outlook, the FY25, the recovery of volumes across the sector, the ramp up of capabilities, capacities, and higher operating leverage shall lead to EBITDA growth. They also feel that commissioning of expanded capacity of NT and ethylation is likely to help them, and also the zone 4 is likely to start gradually going on stream. So that's the word coming in on the outlook. But we also had the management of the company on the show. Let's go across and take a look at what they had to say.
Margins, frankly, remain under pressure, and it's mostly driven by China. I think given their domestic overcapacity situation, they continue to dump products in the global markets. And for business like ours, where we have more than 60% exports, it continues to impact us. I think on volume front, we feel confident of delivering 20 to 30% growth. I think we remain committed to deliver, the earlier guidance of 20 to 25% CAGR growth in our bottom line.
Okay, on that note, let's just slip into a very short break. We'll be back with more stocks after the break.
Welcome back. You're tuned into Market Fatafat, where we're taking you through all the stocks that are in focus in today's trading session. So let's get started yet again. Sameet, coming to you. Welspun Corp is what you've picked out for us. Tell us, what are you seeing on the charts for this one?
Yeah, as far as Welspun Corp is concerned, this stock has been consolidating of late, but since morning, the stock literally took off. It has surpassed its recent, I guess, 3 to 4 weeks high. So overall stock has been consolidating in a narrow range today. It has broken out from a bullish track pattern. So from here on, we would expect continuation of this move, at least a move towards 740, 50 cannot be ruled out in the near term. Any dip could be a buying opportunity for us.
Surely keeping an eye out on that. Let's move on, talk about Shipping Corporation of India, because that also is in focus on the back of its numbers. As of now, the stock is holding on to very strong gains, 8% uptick that we'll be seeing. And no doubt, because it's a good set of numbers that the company has reported. Revenue seeing an uptick of almost 27% this time. Revenues coming in at 1,514 crores. We're seeing margin seeing an expansion of 341 basis points. Operationally, also the performance has been good in terms of the EBITDA that's come in at an uptick of 40%, and the profits of the company also seeing a good growth of almost 70% that one could say. So yes, on the back of that, Shipping Corporation of India, strong set of numbers, 8% uptick is what we're watching out for.
All right, Anj, coming to you then, another earnings candidate, Honasa Consumers, good set of numbers coming in there. Tell us, what does the result look like?
Yes, they have reported revenue which is up by 19% to 554 crore, whereas the net profit has also jumped by over 60% from that around 24 crore to almost 40 crore actually. Also the EBITDA is up by 58% to 246 crore. Also, if we talk about margin, then we are seeing good improvement from 6.3% to 8.3%, which is up by over 200 basis points. But ad spends is at 36% of the sales. So for those reasons, the stock might be in a bit of pressure today. Also, the distribution revamp may lead to near-term inventory correction as well.
Okay. Surely keeping an eye out on that. Just before we move on, just let's quickly mark Nalco that's flashing at the bottom of your screen. Right now, what we're seeing in terms of the revenue of the company, that's on a quarter-on-quarter basis, has seen a sharp decline. Profits of the company are also down by 41%. So let's just quickly pull up the chart for Nalco, because seems like it's seen a bit of a fall that is coming also. So yes, watching out for Nalco after its Q1 updates. We'll wait out for the margins as well as the EBITDA. But right now, we're seeing a sharp fall that's come in after the numbers were just reported. Look at the fall that's come in the stock price. It's down 3.4%. It was right near that green mark, and now it's come down. A decline in terms of revenues. Profits of the company seeing a decline as well, keeping the stock under pressure. But yes, that's about Nalco. But let's move on to the next stock. And Sameet, Godrej Consumers is what you've picked out for us. GCPL, so how are the charts looking like for GCPL in terms of overall? What is the target price that you're keeping an eye out on? Currently, yes, today we're seeing a bit of a fall. Last 1 month also, it's not been anything exciting, right? It's been flattish in terms of a return. What should we be expecting now?
It looks a bit weak, with the short-term view. Stock seems to have faced strong resistance around 1500, and last 3 days we are seeing a sharp decline in this counter. So the way overall price charts are shaped up, it seems that the stock has already broken down from its recent swing low. So that confirms a lower top, lower bottom formation. So at least in the near term, we would expect some correction to continue in this counter. So overall, this stock is likely to trade with a slightly negative bias, and will not be surprised to see this even retesting its important levels of 1350, 1340, probably in days to come. So overall, with a short-term view, one should avoid getting into this particular counter. Probably towards 1350, 1320, one can certainly look to go long.
Right, moving on then. Moving on to another counter that is in focus today, an earnings candidate, Siemens, is in focus today. In fact, a brokerage note also coming out by Kotak Securities. But first, let's look at the results here. The net profit has come in seeing an uptick of 26% on a year-on-year basis. The revenue is also seeing an uptick of 6.8% on a year-on-year basis. Margins are seeing an expansion of 166 basis points on a year-on-year basis, and the EBITDA has also come in up 22% on a year-on-year basis. Kotak Securities also came out with a note, but they're maintaining maintaining a sell on the counter, and they've cut the target price to 4,600 rupees. They feel that there is a sharpness on the PAT front. The recent strength in the execution uptick in margin is a problem. The euphoric phase was short-lived for the company, and the order uptick may help revive a weak backlog and improve the execution with a lag, and the trend of outperformance continues versus the preferred pick that they had of ABB. So that's the word coming in from Kotak Securities. But for now, Siemens is trading with gains of 0.7%.
Okay, surely keeping an eye on that one. Let's move on. And Ansh, the next stock that you picked out is Suven Pharma. How are the numbers looking like for this?
Yes, the company has reported revenue of 5,204 crore, which is up by 6.8%. Also, the net profit. The revenue has been reported at 231 crore, which is down by over 33%. The net profit is 60 crore, which is down by almost 50% from that 120 crore. Also, if we talk about EBITDA, that has also come down by over 50% from 167 crore directly to around 80 crore. We are seeing a downtick in margin as well from 48% to 34%, but despite of which we are seeing some gains in the stock as well. Also, the stock has been advancing from last 3 consecutive months and is trading around its all-time high level as well.
All right, moving on. GE Power, another earnings candidate. A lot of earnings candidates. Let's look at the results then quickly. It's trading with cuts of over 1.5% right now, and the results say that the revenue is seeing an uptick of 1.5% on a year-on-year basis, and the loss has though narrowed to 9.5 crores versus 135 crores on a year-on-year basis. The EBITDA margin is seeing an uptick of 243 basis points on a year-on-year basis, and the EBITDA is however down 77% on a year-on-year basis. On the back of that, we do see a whipsaw in the trading session for GE Power. Right now, it is trading with cuts of 1.8%.
Okay, let's move on and then talk about Ansha, Bajaj Consumer. That's the one that is also in focus today on the back of its numbers, I believe.
Yes, that's right. The numbers are a bit negative, but the stock is still trading in gains by over 1%. The company has reported revenue of 246 crore, which is down by 9% on year-on-year basis. Also, the net profit has come down from 46 crore to 37 crore, which is down by almost 20%. If we talk about EBITDA, then that is also down by over 23%. Talking about margin, that has also come down from 17.7% to 14.9%. But if you see on chart, then the stock has been in a sideways trend from over 40 sessions, actually keeping a neutral stance here.
Okay, surely keeping an eye on that one, but shifting focus to an exclusive, and we learned from sources that the Oil Ministry has approached the Finance Ministry on a possible withdrawal of the windfall gain tax. Now, what is the rationale behind this? Let's go across to Prakash Priyadarshi, who's joining with us to give us all those details. Prakash, what are these exclusive details that you're picking up on windfall gain tax?
Yes, we are learning from our sources that the Oil Ministry has approached the Ministry of Finance regarding windfall gains tax. We are given to understand that the Oil Ministry has asked for the withdrawal of the windfall gains tax on petroleum products. In fact, several presentations have been made in the Finance Ministry, and the Oil Ministry is now recommending for its immediate withdrawal on back of reduction in crude prices. Crude prices have been below $80 per barrel hovering within a range bound for quite some time. Therefore, Oil Ministry is now requesting for the withdrawal of windfall gains taxes. In fact, it also believes that the crude price is likely to go further down. Along with that, it has also made 3 to 4 rounds of presentation to the Finance Ministry on the impact of windfall gains tax on the investment of oil producers. And the Oil Ministry is also of the view that the oil companies are not making any windfall gains if the prices are below $80 per barrel. Therefore, these recommendations have been made. And if it happens and the government decides to withdraw windfall gains taxes on petroleum products, that is going to help to the companies like ONGC and OIL. As you are aware that the Finance Ministry has revised the windfall gains tax on petroleum products to Rs $2,400 per ton effective from August 1. But the government has not been levying windfall gains tax on export of ATF, petrol and diesel for last few months. And therefore, these recommendations have been made. In fact, the sources are confirming that the Finance Ministry is considering this proposal, but it has given no timeline for the withdrawal of windfall gains tax.
All right, let's move on to another ET Now exclusive then. ET Now's Anurag Shah caught up with Girija Subramanian, who's the CMD of New India Assurance, for an exclusive chat. Let's go across and listen in to this slice of that conversation.
In the last quarter, we have been trying to, change our line of business mix with more focus towards retail and little less towards corporate. And we have been shedding GMC business that has been bleeding for the last many months now. And this is a part of that journey. And slowly as we go, you will see the change for the positive. Though the growth is muted, it is because of shedding unwanted business. And though we are trying, we have shifted our focus to other lines of business like home and other sectors.
On the combined ratio, if we see year-on-year basis, there is no significant improvement. What are the main reason for that? And for this fiscal, what combined ratio you are targeting and working on it?
Actually, on the combined ratio, the main reason is on the motor TP. There has been no increase in premium, whereas the inflation rate is going higher and higher every year. So therefore, our motor TP claims are costing much more, and they have been growing incessantly from FY21. And right now, it is at very unsustainable levels, motor TP. So because of that, that is actually the reflection on the total overall combined ratio. Apart from that, we have a government health scheme in Rajasthan where the premium has not increased from last year, and the claims have gone up significantly high in the last quarter due to the heat wave. It's a seasonal reason that we have. So because of that, that has also added in its big way to the combined ratio. So our other retail products and the price improvements we have done are now picking up traction. We are encouraging a lot of growth in that sector. So with the improved pricing, we expect that in the next few quarters, this combined ratio would come down.
So any price hike you have taken in a retail segment, especially your biggest portfolio, that is health insurance?
Yeah, we have been increasing price annually on health, as you know, against increasing it every few years, which was how we used to do it earlier.
Okay, with that, it's a wrap on this edition of Market Fatafat. Thank you so much, Sameet, Aditya, as well as Ansh, for joining in with us. And that's a goodbye from Ankita, myself, as well as the team who put the show together. Thanks for tuning in.